Welcome back, everybody, to the deep dive. Today we're going to get into something that you might not have heard of before. It's called the gross profitability premium.
Interesting stuff.
Yeah, it really is. And we're going to be going deep on a paper today from the Journal of Financial Economics. And the title is The Other Side of Value, the gross profitability premium.
Yeah, and you might be surprised by what we find out.
That's what really caught my eye about it.
Yeah.
And, even the title kind of hints at it, right? That, maybe there's more to investing successfully than just looking for bargain stocks, right?
Right.
So let's unpack this a little bit.
Yeah.
What is this gross profitability premium?
Well, it really all starts with understanding gross profitability. And so instead of looking at earnings or free cash flow, which can be influenced by a lot of things, accounting choices or short-term decisions,
Right.
this paper focuses on a metric called gross profits to assets.
Okay. Break that down for me. What
yeah.
does that mean?
It's actually simpler than it sounds.
Okay.
So think of it this way. You take a company's revenue, right, and you subtract the direct costs of making their products or delivering their services, so things like raw materials or labor.
Right.
What's left over is their gross profit.
Got it.
You divide that by their total assets, and that's it.
Okay.
It's a way to look at how effectively a company is using their assets to generate pure profit, from their core operations.
So we're really talking about efficiency here.
Exactly.
Like not just how much profit are they making, but how well are they using their resources to actually generate that profit?
Exactly. And what's really remarkable is this very simple metric, this gross profits to assets, can be a very powerful predictor of future stock performance.
Really?
Yeah.
So even if a company isn't, what we think of as a classic value stock, meaning, the share price doesn't seem particularly low,
Right.
it can still be a great investment if it's really good at turning its assets into profit.
That's exactly right. And that's the key insight here. The research actually found that companies with high gross profits to assets ratios tend to outperform the market even if their valuations don't scream bargain. They actually compared portfolios of companies sorted by gross profitability to portfolios sorted by the traditional book-to-market value metric. And so just as a reminder, book-to-market compares a company's stock price to its accounting value.
Okay, so we're pitting this new profitability strategy head-to-head against a classic value investing approach here.
Right.
And what happened?
Well, the profitability portfolios consistently outperformed.
Okay.
Think of it this way.
Yeah.
If you had invested $10,000 in the portfolio of companies with the highest gross profits to assets,
Okay.
after 10 years, you would have had about $4,000 more than if you invested in the portfolio of companies with the lowest gross profits to assets. So that's the power of focusing on profitability.
Yeah, that's a huge difference.
Yeah.
But I'm still trying to kind of wrap my head around how this all relates to value investing. We always hear about, looking for these undervalued companies.
Right.
How does having high profitability fit into that?
Yeah, that's where things get really interesting.
Okay.
So the research shows that these companies with high gross profitability are often considered growth stocks, not value stocks.
Wait, so you're saying that focusing on profitability can actually lead you to growth stocks?
Right.
That seems kind of counterintuitive.
It really does challenge conventional wisdom.
Yeah.
And so growth stocks typically have higher valuations,
Yeah.
meaning their price is high relative to their book value because investors are expecting them to grow more quickly.
Yeah.
But what this research highlights is that high profitability is a key reason why they're able to grow and deliver those higher returns.
Okay.
It's not just hype. It's backed by solid fundamentals.
So we're seeing this, like hidden link between profitability and growth.
Yep.
That, traditional value investing might completely overlook.
Exactly. And it's not just about these theoretical portfolios. The researchers actually tested a very specific strategy using real companies based on these findings. But we'll dive more into that in part 2 of our deep dive. So stay tuned. It gets even more interesting.
Okay, I'm hooked. All right, so you mentioned a specific strategy based on this gross profitability premium. So let's dive into that. What did the researchers actually do with this insight?
Well, they put it to the test. They actually designed a strategy that focused on the 500 largest non-financial companies in the U.S. So think of it like a Fortune 500 approach to profitability.
Okay, so they're playing with the big leagues here. What did this strategy actually involve?
Well, it's surprisingly straightforward. So they rank these 500 companies based on both their gross profitability, using that gross profits to assets metric that we talked about, and their value measured by that classic book-to-market ratio.
So they're looking at companies that are scoring high on both profitability and value.
Right.
It's like a best of both worlds approach.
Exactly. They wanted to see what happened when you combine those two factors. And remember, traditionally, these have been seen as separate camps in the investing world.
Right.
You have your value investors who are hunting for those bargains,
Yeah.
and your growth investors who are chasing, the companies with the highest growth potential. But this strategy really kind of blurs those lines.
I like it. So what happened when they put this hybrid approach into action?
Well, the results were really impressive. The combined strategy generated even higher returns than either the profitability or the value strategies alone, and so they actually created a portfolio by going long on the top 150 companies, so those with the highest combined ranking on profitability and value, and short on the bottom 150, and this portfolio delivered average excess returns of 0.62% per month.
Hold on, 0.62% per month. That sounds like a lot. Can you put that into perspective for me?
Yeah, you're right. Those numbers can seem kind of abstract. So to give you a real-world comparison, the stock market as a whole, measured by something like the S&P 500, has historically returned around 0.5% per month on average.
Okay.
So this strategy is suggesting that you could potentially outperform the market by a noticeable margin.
Okay. Now that's something I can wrap my head around, outperforming the market consistently, I think is the dream of every investor.
Yeah.
But one of the things that always makes me nervous about these investing strategies is, what about trading costs? Eating into those returns. Did the researchers address that at all?
Yeah, that's a great point, and yes, they did. One of the things that actually makes this strategy particularly appealing, especially for long-term investors, is that it doesn't require constant trading. In fact, only about 1/3 of the portfolio turns over each year.
Oh, wow. So you're not constantly buying and selling stocks, racking up all those transaction fees.
Right.
That makes this approach seem a lot more practical, even for someone like me who doesn't want to be glued to their trading app all day.
Exactly. It's really about identifying those companies that have a durable competitive advantage. The ones that can consistently generate those strong gross profits and maintain those attractive valuations over time. So you're not chasing those short-term trends. You're really investing in companies with solid fundamentals.
I'm starting to see how this gross profitability premium could really change the way that I think about investing.
Yeah.
But you mentioned earlier that this research goes even deeper, right? Exploring how gross profitability helps explain other market phenomena. Can you elaborate on that for me?
Absolutely. The paper actually delves into how gross profitability might play a hidden role in other well-known markets, what are called anomalies. And so these are these patterns in stock returns that don't quite seem to fit traditional theories.
Okay, give me an example of one of these anomalies.
Well, one classic anomaly is the momentum effect, and this is where stocks that have performed well in the recent past tend to continue performing well, while stocks that have done poorly continue to lag. It's like they have this inertia, but traditional finance theory has a really hard time explaining why this would happen.
Right, it almost seems counterintuitive. Like, why wouldn't investors jump on those lagging stocks, assuming they're undervalued?
Yeah, that's the puzzle.
Yeah.
But this research suggests that gross profitability might be a piece of that puzzle.
Okay.
Companies with high gross profits tend to have more what's called momentum, meaning that their strong performance is more likely to persist.
So it's not just random luck.
Right.
It's tied to that underlying profitability engine.
Exactly. And it's not just about momentum. The researchers found that gross profitability actually helps explain a whole range of other anomalies. So, for example, companies with high market power, think of those that really dominate their industry, tend to outperform.
Okay.
And companies that issue a lot of new stock tend to underperform. And this research suggests that differences in gross profitability might be the common thread connecting these seemingly unrelated phenomena.
This is blowing my mind a little bit. It's like gross profitability is this, hidden force driving all sorts of patterns in the stock market.
It really does offer a new lens through which to view investing. It suggests that really focusing on a company's ability to generate profits from their core operations can provide really valuable insights beyond what those traditional valuation metrics might reveal.
Okay. I'm convinced that this gross profitability premium is a powerful concept.
Yeah.
But, a lot of us aren't, professional investors picking individual stocks.
Right.
So how can we actually use this knowledge to make better decisions?
Yeah, that's the key question, right? We need to connect this academic research to the real world. How can you, as a listener, apply this knowledge to your own financial life? And that's what we're going to explore in part 3 of our deep dive.
Yeah, you've definitely got my wheels turning here. I'm thinking about my own portfolio now.
Right.
And I'm wondering, am I overlooking this crucial profitability factor?
Right.
So let's get practical. How can we actually use this knowledge,
Yeah.
even if we're not scouring financial statements
Yeah,
and, picking individual stocks, how can we make smarter investment decisions
right.
using this information?
Well, it's all about asking the right questions. So let's say you're evaluating a mutual fund or an ETF.
Okay.
Don't just stop at, the past performance or the expense ratio. Dig a little deeper into the types of companies that they hold.
Okay.
Are they consistently profitable?
Yeah.
Are their business models built for that kind of long-term success?
So even if I'm not, out there picking individual stocks,
Right.
I can still kind of apply this lens of profitability
Right.
to the funds that I'm investing in.
Exactly.
Yeah.
Look beyond the flashy marketing
Yeah.
and really see if those underlying companies have that profit-generating power.
I like that. And, this mindset can be helpful even beyond your investment portfolio, I think.
Yeah.
Let's say you're thinking about a career change, you're thinking about starting a business.
Right.
Understanding kind of industry-level profitability trends can be incredibly valuable.
Oh, yeah, for sure.
Are the companies in that sector generally thriving?
Yeah.
Are they struggling?
Right.
Are there any up-and-coming players who are disrupting the status quo with these, innovative, high profitability business models?
Exactly.
It's like this gross profitability premium can be a guiding principle for
Yes.
all sorts of financial decisions.
It's a really good point. It's a reminder that profitability is the lifeblood of any business.
Yeah.
Whether you're, investing in stocks or choosing a career path, or even just like evaluating the companies that you interact with as a consumer,
Right.
understanding profitability can really give you a real edge.
Yeah. What's striking me is how this seemingly academic research, right,
Yeah.
has such, wide-reaching implications. It's really shifted my perspective, I think, on how I think about investing and, business in general.
I think what's so powerful about this research is that it really encourages us to think critically about the assumptions that we make about investing.
Yeah.
For years, the focus has really been on, finding those undervalued companies.
Right.
But this paper really shows that profitability, and particularly gross profitability, can be just as crucial, if not more so.
It's like we've been given this new map to navigate the complex world of investing. One that
Yes.
really highlights the importance of profitability alongside value.
It's a great way to put it. And this map isn't just for, those seasoned investors. It's for anyone who wants to make informed decisions about their financial future.
Right.
Whether they're just starting out or have been investing for years, understanding the power of gross profitability can really be a game changer.
Well, folks, there you have it. A deep dive into the world of investing and the surprising power of the gross profitability premium. We've challenged some common assumptions, explored a fascinating academic paper, and hopefully equipped you with some new tools to approach your own financial journey.
I think that's a great summary.
And we hope you'll join us next time for another deep dive.
Yeah, remember, the most valuable knowledge is the knowledge we can understand and apply to our own lives. So as you continue exploring the world of investing, keep this research in mind, challenge the status quo, dig deeper into the companies you're investing in, and never underestimate the power of profitability.
That's right. Until next time, keep those minds curious and never stop seeking knowledge.